let's jump right into the beginning of this, which is Bitcoin versus crypto. And because I think that sets up the discussion for Bitcoin marginalism or marginalist. And so maybe tell us the way you're thinking about the combination of Bitcoin maximalism and crypto agnosticism, as you called it.
Yeah. I'll caveat everything I say after this with there's a lot of different definitions of to different people of what these words mean. I try to define in the paper of how to really, how we're thinking about it from this perspective.
Mm-hmm.
But there's a wide spectrum of people that are Bitcoin maximalists. There's a wide
Yeah.
spectrum of people I've met within crypto, and so with that understanding, I think the idea is that we had we had the system emerge. We had Bitcoin emerge, and then we had competitors emerge or competing or alternatives or there's different ways of viewing it. But as this system started to grow over time, there's been different forms of doctrine that have effectively emerged around it, different cultures, different perspectives of whether it's developers, whether it's investors, whether it's miners, stakeholders in all of these different ecosystems. And a lot of people have tried to categorize what those cultures are.
Mm-hmm.
Bitcoin maximalism, started by Vitalik Buterin, is a term that was intended to be more of like an insult of people that are hardcore ideologues that are resistant to change in different ways. And if you look at the history of Bitcoin, you can see the value in that type of mentality. Uh, I think a lot of people try to view these cultural distinctions in a very black and white way, and that's just something that's never made sense to me. I've
Mm-hmm.
never understood that you could look at different cultures within Bitcoin and crypto, and come to these like conclusions about people. It's just is something where I'm just like, yeah, I mean, look, I go to I go to different crypto conferences, and there's scammers everywhere. I see these like sycophants that are walking around and like saying a bunch of words nobody understands that they don't understand either, and trying to sell people crap. Like that exists in a very pervasive manner within those cultures because it's a much more open-minded culture. It's much easier to take advantage of people in those situations. It attracts that type of personality more. There's also a bunch of really brilliant guys who see who find really interesting technological innovations that have happened. And there's also guys who are just not interested in monetary economics at all. They're purely like developers who like to toy with interesting types of protocols and applications, etc. There's this wide spectrum of people within that group. Same thing with Bitcoin maximalism.
Mm-hmm.
There's angry people who don't trust the state, who might be partially autistic, who will never trust anything in their lives. There's very brilliant people who are well versed in economics, and they understand the reason that Bitcoin maximalism has existed, why the block size wars occurred, why the immutability of Bitcoin is such an important property to maintain, and they're capable of arguing that with people who are trying to go against it. And all these other different people that are involved in these groups. So what I wanted to do is take a step away from like, okay, so we have all these cultures that have existed within Bitcoin and different almost philosophies. And it's like, okay, so if we're starting a venture capital firm that's investing around this, what's our philosophy? How do we think about this? And the parallel that I've seen with that was always kind of in the back of my mind that I try to capture in this writing was as these cultures emerged and as the thought around this industry developed, it's very parallel to how the theory of value actually developed in economic history.
Mm-hmm.
And that's where this term marginalism comes from. So that's what I try to describe in the paper is that there was this initial view of value that we had. And that was like, this was kind of at the dawn of economics when the classicism emerged. That was like the prevailing theory. This is what thinkers like Adam Smith and David Ricardo, Jeremy Bentham, like very famous names, were all a part of. And the pervasive theory of value at that time, which we've probably heard a lot in Bitcoin, was the labor theory of value. And the belief was that labor is the primary input cost because these were agricultural societies, and like that's their perspective on cost of labor at that point for most of what they were creating. It's a primary cost, and value is primarily driven by how much labor goes into something. And Adam Smith posited back then, a lot of these guys were like, look, this is what we view as the theory of value, but there's certain things that we can't reconcile with that perspective. Adam Smith had the famous like water diamond paradox, where he's like, well, why is it then that diamonds are so much more expensive than water when water is something that people demand more, and they're trying to reconcile this with the view of labor theory of value, and they never really could. And then, so this was a view that went on for centuries, and then we had these two conflicting, as Marxism started to emerge. We also had marginalism as a school of thought that started to emerge. It was kind of like the offsetting view. Um, and marginalism was kind of like the next evolution on top of classicism, where they were like, okay, well, um, or sorry, it was not as much of like the next evolution on top of, but it was more of a response to classicism, where they're like, okay, so you guys view everything, all value deriving from like the cost of the inputs and like all these supply side considerations that happen. When the reality is that value is totally subjective, and how much people pay for something in a market is really how much demand there is for it. That's based on subjective views of the world. What are my tastes and preferences, and what do I need to survive? I need water to survive. Okay, I need protein. Okay, I prefer burgers in Europe, and that's why it's demanded more here, and that determines prices, and that's where value comes from. So is this response that kind of swung to the other end of the spectrum, and that was really interesting because it was later on in the marginalism revolution uh, that thinkers started to come and say, no, it's actually both of these things. So at the beginning of marginalism was like very famous Austrian economists, Willy Jevons out of Europe, and then Karl Menger, who's considered the father of Austrian economics. They were the guys who kind of viewed the subjective theory of value. Uh, and then it wasn't until later on when Thomas Marshall came about, and he was just like, no, value is something that actually requires both supply and demand side considerations. It's the cost of the inputs are a constraint on how much of this is actually produced, and the subjective value of it determines whether or not people care about those cost of inputs in the first place. And that's where supply and demand charts came from. And he was the first one to describe both of these theories of value in tandem. And then they said, okay, not only is it about the two forms of value, but it's about how much it exists at the margin. So how much supply exists of something today and how much that fulfills the current level of demand for it determines what the price is actually going to be. And that's what kind of solved that water diamond paradox that Adam Smith posed of, yeah, sure, I mean, diamonds are more expensive than water right now because water is so abundant from a supply side understanding. But if all the water dried up in the world tomorrow and just one unit of water appeared, it would be the most valuable thing on earth. Mm-hmm. So depending on how much exists in the supply determines what it is. So these two ideas, looking at value from a marginal standpoint, meaning it's constantly fluctuating over time based on supply and demand considerations, as well as looking at both sides of supply and demand, it basically changed how we viewed microeconomics. It changed everything that emerged from then on. A lot of what we're taught in textbooks today in econ kind of emerged from this marginalist revolution. And that's something that I've always seen is kind of parallel to how thinking has emerged within the Bitcoin and crypto world, right, where Bitcoiners who were hardcore maximalists were kind of like this classicist viewpoint. Crypto swung to the other end of the spectrum of like, no, it's not about the supply. It's about how much utility all of these things provide. And the more programmable it is, or the faster it is, like that's the most important thing. And I think where we've come out to is no, Bitcoin supply side constraints are paramount to achieving this monetary revolution. And without this, we kind of undermine the entire value proposition of this industry. We need a highly scarce, immutable monetary asset underpinning all of this. It's decentralized enough to be permissionless against any sort of authoritative action. Need that, full stop. And given that, there's also a lot of valuable things that can emerge and provide utility from a demand side as well. There's an entire ecosystem emerging around Bitcoin that's going to be providing that. And the value of that is going to be, we're going to be assessing that on the margin as things change and as new things are created. Some things might be valuable today that aren't as valuable tomorrow. And as investors, we kind of want to be looking at it from that perspective. So like, that's the whole view of like how we think about the philosophy on this industry and how it's very parallel to how thought has developed in the past.
Yeah, I think that because I've always felt that like what's happening in crypto is interesting, but at the
Yeah.
same time, I've always felt like unless it's rooted on Bitcoin as the base layer, then all we're ever going to get is Wall Street 2.0. We're just
Yeah.
going to get instead of options contracts, we're going to get smart contracts, right? And so to me, it's really interesting what's happening in crypto, but it's not the innovation. The innovation starts with Bitcoin, and then building these layers from that foundational structure of removing money from the state is why I consider myself a Bitcoin maxi. But I was never so much a maxi that I came to the conclusion that nothing ever good was going to
Yeah.
come out of the crypto space. I always thought there's a lot of interesting innovation there. For sure, something innovative will come out of that. But for the most part, I saw the scams, I saw the
Yeah.
corruption, and I saw some interesting tech that was just slightly iterating one next level up from Wall Street.
Yeah.
So you're on the same page.
Yeah.
So let's transition this then into the adoption cycles and how you laid out store value, medium of exchange, and unit of account as 3 different adoption cycles. Because to me, that clarified everything. I've always just in my own rudimentary way been like, taking Bitcoin as payment, it's just too early to do that yet, because right. But you defined it in a way from an investor's point of view as to why those cycles and the timing of investment in those cycles, the development of product in those cycles is so key. So I want to transition that this chart that you had in here, and I'll see if I can pull it up, which was the 3 different cycle, the 3 different S curves. That was so cool. This one right here, which I know you're familiar with, and we'll put that up on the screen for everybody. Let's talk about that, because it is really interesting how, and I think it just intuitively made sense how store value phase, which we're in right now, is such a big phase and so important to developing the next phases. And I think a lot of people in crypto and the big block wars was about like, no, we need to jump right to unit of account as quick as possible in order for this to be successful. But you really lay out a case why jumping there too early is going to create issues or failures, especially for the companies trying to do that. So let's maybe talk through these 3 different phases and why one is so important for the next one to be successful.
Yeah. You hit the nail on the head. Like a lot of these crypto protocols that have tried to jump towards this like unit of account, medium of exchange type functions out the gate, it's putting the cart before the horse, and because of that, they have ended up undermining a lot of their value from moving prematurely into some of these other functions. It's kind of interesting that I didn't really call it in the papers. I've always viewed that as very similar to actually kind of how the fiat dollar has emerged. It emerged, it had to get there by being a good store of value over time. But once it was so deeply entrenched as a medium of exchange and unit of account, that's when we were actually able to undermine those original store of value properties that made the dollar so valuable and dominant in the world. And now it's so deeply entrenched as a medium of exchange and unit of account, it's very hard to reverse that. And I feel like crypto was trying to go after a similar strategy.
That's a really good point, because we're actually at this precipice in history, right, where we're seeing the erosion of the treasury. We're seeing the store of value be eroded, but greater adoption of unit of account through USDT, USDC, spreading the dollar globally. That I never thought of it from that angle. That's really insightful. So unit of account could persist for some time, even though store value is starting to deteriorate in the dollar.
Right. I mean, it's just like the dollar, once it's denominated in the majority of global contracts, it has the deepest and most liquid capital markets surrounding it. It just becomes very hard for anybody to de-dollarize over time. It's very impractical. It's very costly. It's very risky to find an alternative.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log into any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.